Good morning, afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, for what is going to be nothing short of another jam-packed daily market update with yours truly on this smashing Saturday. And it is Saturday, so we are in a slightly unfamiliar setting. To some of you, we are at home. We like to catch a little bit of downtime, which can be often easier said than done in a market that moves 24 hours a day, 7 days a week. So we have another jam-packed update for you today. We're going to be starting off by looking a little bit at what we looked at yesterday in regards to the kind of institutional uptick that we're seeing in regards to Bitcoin and crypto more broadly. Throughout this pullback that we've been in since March, we've seen some pretty serious accumulation, whether that be from an institutional point of view or whether that be from a kind of large Bitcoin wallet point of view. That's what very often happens in pullbacks like this that are in a broader uptrend. People take advantage of them, and that's exactly what we're seeing, ultimately positioning for us for that next leg to the upside. So we're going to be looking at some really interesting things in relation to this. Of course, going back to what we looked at yesterday, the fact that Bitcoin has crossed that $20 billion mark in regards to net flows. We'll also be looking at, again, reiterating the fact that BlackRock just last week bought another $1 billion worth of Bitcoin. Morgan Stanley disclosed their Bitcoin holdings. I think it was like 271 million. This is a very interesting chart in regards to whale activity. And you can see the sort of fierce nature of accumulation that we're seeing, certainly in and around this pullback, and certainly towards the bottom of this pullback. And since then, we've started to sort of climb our way out. So certainly in this sort of area here, which of course we shall be coming onto. We're going to talk about a global reset that's coming. And I don't talk about this enough. However, it's absolutely my opinion at this point that the acceleration towards a global reset started in 2008. I was listening to a great Whitney Webb podcast yesterday where they had a guest on that was essentially looking at a report that was made by BlackRock in 2019 on the lead up to 2020, which basically outlined exactly what the Federal Reserve were going to do in regards to how they were going to combat what took place from March 2020 onwards. There's been a hurtling towards a global reset. We've never seen proliferation of the currency system like we're currently seeing. There's no signs of it stopping, and this is ultimately deliberate to usher in a new system that crypto is going to play a role in. And Bitcoin coming around in 2008 was no coincidence. This is when a lot of this stuff started, and we're going to be talking about that and also highlighting the fact that BlackRock, and we did look at this, consistently now highlighting, including Larry Fink on national TV, that Bitcoin is a hedge against basically proliferation and will transcend all of the global currencies or all of the currencies because it is a global one. So we'll be talking about that, US deficit going crazy. This is why Bitcoin is going to do what it's going to do, and ultimately institutions are positioned for that. And then we're going to be talking about some news that came out of the SEC yesterday in regards to them now approving New York Stock Exchange options trading on Bitcoin ETFs. We're going to be looking at some comments on this. We looked at this ages ago when this was kind of initially approved, or the plans to allow spot options were approved, because this could be huge. This could be what sees that next sort of event to drive Bitcoin to the moon. Jeff Park, we looked at this when he released this on the 21st of September. He really outlines just a quick segment from this before we get into it a little bit later on. I share that we are on the verge of witnessing the most extraordinary upside vol of vol in financial history. And we'll sort of break that down a little bit more detail. He also goes on to sort of dispel some of the kind of narratives in regards to options potentially being a bad thing. And then we'll finish things off on the Bitcoin and sort of crypto space more broadly as price action. So we've got a hell of a lot to get into, guys. We've gone over quite a bit of it already, but let's dive straight into it. And let's start things off with what we looked at yesterday. This was from Eric Balanchunas. What he's highlighting here is the fact that the Bitcoin ETFs continue to accumulate and go up in regards to Bitcoin. And they've massively outperformed any ETF to come prior. This has largely been led by IBIT, which of course is BlackRock. Then you've got Fidelity's BTC, ARK's BTC, Bit BTC, which I think is that from Bitwise, or is HODL from Bitwise? But there's a massive accumulation of Bitcoin going on by institutions. Just last week, BlackRock bought in a single week $1 billion worth of Bitcoin. Meanwhile, retail still very unsure. I think there's a question also in regards to alt season and will it happen? My opinion is that it will, and that we're not seeing anything out of the ordinary in regards to historically how long alt seasons have taken to take place. People forget that, and they think that this cycle is one that's been out of the ordinary, and it's really not. Certainly if you just pull the charts up and look at them for yourselves, which people really need to do. There's a lack of kind of people willing to do their own sort of digging in regards to the cryptocurrency space. So not only have we got a lot of news in regards to institutions accumulating Bitcoin aggressively throughout this kind of pullback, we also can see this is whale activity. So never in history of Bitcoin have whales been buying Bitcoin this aggressively. They all know what's coming. And there's no coincidence that this is all happening on the back end of debt proliferation like we have never seen. We've never seen this. In the past 3 weeks, $500 billion worth of debt has been added to the national debt in just 3 weeks. $500 billion in 3 weeks. Now, we're going into an election. There's going to be variables there. The debt ceiling is set to be raised again. It doesn't seem like it was that long ago that it was raised previously. And since then, they've drained nearly $2 trillion out of the reverse repo. So to put $500 billion in context, that was the size of the Great Financial Crisis in 2008 bailouts to banks. It was a little bit more than that, but it was in the sort of $500 billion range. And we've done that in 3 weeks in a not such a bad environment. Economy's not doing bad at all. This is deliberate. And this is why the likes of BlackRock are highlighting and getting on board with Bitcoin, because it is there to replace. Bitcoin itself is never going to be practically used as a money. It is already being used as a global store of value. But crypto more generally and distributed ledgers are here to introduce a global new financial system to the world. There's no doubt in my mind about that, guys. It's very ironic, isn't it, how all of these sort of and I'm a libertarian myself. I don't think Nirvana's for this world, and there's no sort of perfect ideology. Well, that's a whole other topic and debate, isn't it? But the likes of BlackRock getting on board with this, again, I want to sort of re-highlight that Whitney Webb. Please go and give it a watch. I can't remember what the name of her podcast called, but it's got somebody on that talks about the sort of plunder that's going on and how BlackRock's behind a lot of it, and how BlackRock wrote a paper in 2019 that subsequently outlined exactly what central banks were going to do in 2020, basically March 2020, and the events that took place there. And that's where the term, by the way, helicopter money comes from, their report. A lot of people don't know this stuff, but there's absolutely a global reset coming. Crypto is going to play a massive role. And this is why we're seeing the onboarding of institutions and large Bitcoin sort of whales ultimately ready to propel Bitcoin in the direction that we've been technically looking at it going at for a long time. Why we're a technical analyst is because we don't know inside information like the institutions do. What we can see, though, is their movements through the charts. And that's how we look at markets in regards to phases. Phase 1 is when they're accumulating. Phase 2 is that upside. Phase 3 is when your retail is starting to become exit liquidity. And phase 4 is when they're out and they're ultimately driving that price lower. And right now, Bitcoin is very clearly still in a phase 2. There's lots of technical patterns predicting to the upside. The altcoin market is really just getting ready to get started. And when you look at markets more broadly, they're all positioned for upside. Whether that's stocks, whether that's gold. We made that call on gold to the target that it got to. The SPY in regards to we were looking at in 2023, everything's progressing in the direction that we thought it would, and there's going to be continuation of that. So I wanted to throw that sort of global reset comment in. This is US deficit tops $1.8 trillion in 2024 as interest on debt surpasses $1 trillion mark. So there's now $1 trillion worth of debt. The Biden administration rang up a budget topping $1.8 trillion in fiscal in 2024, up more than 8% from the previous years and a third highest on record. Bearing in mind that's including wartime. Interest expenditures for the year total $1.16 trillion for the first time. That figure has topped the $1 trillion mark. It's insane. Absolutely insane. And what people don't realize, the flip side of all of this in regards to money itself is money is debted into existence. You give up the majority of your life to work for the very thing that they can entirely control and manipulate. And people need to know about this sort of stuff. And certainly financial education is a big part of things that they definitely don't teach you in school. They teach you in school essentially how to become a good worker. And if you want to look at who sort of funded a lot of the schooling system, it's all still there. But this is interesting. This is very important. We are seeing that gobbling up, and I ultimately think that's for that ultimate positioning taking place right now for the continuation, which you're on the cusp of Bitcoin in what is a broader uptrend. This is that broadening pattern. 1, 2, 3, 4 times a lady. You will break to the upside here and see that continuation, which we're very much looking forward to. Yesterday, let's pivot on to some other pretty interesting news. The SEC approved a New York Stock Exchange options trading on spot Bitcoin ETFs. This is a big deal, and we looked at Jeff Park's take on why this was such a big deal. He's also highlighting this. The SEC approved New York Stock Exchange Bitcoin ETFs options based on interactions from many informed investors on my original post. I compiled the most common questions to go deeper on why I believe Bitcoin options are truly game-changing. Get on board and hodl type. Here's my top 3. We could read both of these. We might do it. Let me just check actually how we are for time, because I don't want to completely engulf all of your Saturdays. Going on for 11 minutes. Yeah, we got time, guys. I hope nobody minds, hopefully, because this is very interesting, and it was a major event that took place yesterday that I simply think most people don't understand. We'll try and explain it in a little bit more layman's terms. So what Jeff Park does here is he breaks down some sort of common misconceptions. So the conception about synthetic Bitcoin essentially diluting and reducing volatility. He said you can't short squeeze $1 trillion asset. And he talks about how actually you can. And then he also talks about why the fact that some people say we already have Bitcoin traded options. So this is him replying to a lot of the questions that were based on his original post in regards to him being extremely excited on the introduction of Bitcoin options, Bitcoin spot options, which we're going to get into now, just reiterate people on it, and then we'll finish things up with a little bit of price action. Let's dive into this. So he goes on to say, or said back at the 21st of September, with today's approval by the SEC to list and trade Bitcoin options, I share that we are on the verge of witnessing the most extraordinary upside vol in financial history. I felt this deserves a fuller explanation, so I want to highlight a few characteristics of Bitcoin, the nature of the regulated options market, and the powerful combination of the two. Without exaggeration, this marks the most monumental advancement possible for the crypto market. For the first time, Bitcoin's notional value will be fractionally banked with ETF options. What do I mean by that? While Bitcoin's non-custodial capped supply is a great virtue, it also has been a drag, limiting the ability or its ability to create synthetic leverage. Despite Deribit's efforts, it never adequately solved the counterparty versus capital efficiency matrix for wide adoption. And CME futures options require too much active management. Now, for the first time, Bitcoin will have a regulated market with the OCC protects, where the OCC protects, clears members from counterparty risk. This means Bitcoin synthetic notion exposed can grow exponentially without the JDT risk that have kept investors at bay. In a liquidity-driven world, unlocking synthetic flow with leverage represents the greatest opportunity for Bitcoin ETFs, enhancing their financial utility compared to spot markets. Additionally, Bitcoin can now express duration as part of a leverage calculation for the first time. This is very interesting because it means that you can go long Bitcoin without leverage long Bitcoin without getting liquidated. Theoretically, with a long enough date. So if Bitcoin moves in 4 cycles, you can bet on Bitcoin's price being higher in 4 years with leverage. It's very interesting, but we'll continue on from this. So retail traders have embraced perps to take on leverage, but these instruments are imperfect, more akin to a series of daily ODTE options that must be rolled over constantly. With Bitcoin options, investors can now make duration-based portfolio allocation bets, especially for long-term horizons. There's a good chance that owning long-dated OTM calls as a premium spend will give investors more bang for their buck than a fully collateralized position that could drop by 80% over the same period. People often compare Bitcoin to call options due to its premium decay and occasional explosive upside. Now you can bet on the vol to the upside with the same or less premium while capturing more delta over the longer time frame. An extremely compelling opportunity. Bitcoin also has a unique volatility characteristic, and one that most important is the volatility smile. Most equity indices display a volatility skew where upside vol is cheaper than downside vol, i.e. protection is more expensive than speculation, as always. Bitcoin is unique because melt-ups are as frequent as meltdowns, so the market demands a risk premium on both sides. The practical implications, it seems in the second-order Greek called vana, historically with call options, as spot rises, implied volatility tends to fall. So while the option delta increases, becoming more ITM, the rate of increase slows. This is positive Varna, which creates a sort of drag. However, Bitcoin options have negative Varna. As spot goes up, so does volatility, meaning delta increases even faster. When dealers who are short gamma hedge this, a gamma squeeze, Bitcoin's case becomes explosive, recursive. More upside leads to more upside. This is the interesting thing here, guys. As dealers are forced to keep buying at higher prices, a negative Varna squeeze acts like a refueling rocket. The most critical factor that ties all of this together, Bitcoin itself cannot be diluted to accommodate this newfound leverage. Compare this to stocks like GME or AMC, the meme stocks, where management can issue new shares to exploit pricing anomalies, putting a cap on these stocks' rise. Bitcoin can never do that. You might ask, but Jeff, what about commodities like oil and natural gas? Aren't they comparable? And if so, why is Bitcoin different? The key difference is that most physical commodities have expiration dates, meaning they tend to trade with the future market, not the spot market. Future markets, unlike spot markets, vary in gross and notional exposure based on expiration dates and net interests of physical versus paper. So they don't allow focused participants in one direction, i.e. people trade both long and short on the curve and physically versus paper. Furthermore, these markets are subject to supply manipulation by groups like OPEC, amongst others. In summary, the Bitcoin ETF option market is the first time in the financial world we'll see regulated leverage on a perpetual commodity that is truly supply constraint. Things will likely get wild. In such scenarios, regulated markets may shut down. But the remarkable thing about Bitcoin is there will always be a parallel decentralized market that can't be shut down, unlike GME, which, as you can imagine, will add even more fuel to the fire. It's going to be unbelievably fascinating. So this is huge. I can't understate this. I wanted to spend the time reading that because it's a big, big deal, ladies and gentlemen. This is a big deal. So not only is somebody like me that wants to speculate on Bitcoin and would like to use leverage but doesn't want to use it in the perpetual form because it's too risky, I can now do that and take on more leverage in a safer approach. Just had to switch cameras there really quickly, guys. So the interesting thing is when you're going to end up with this kind of gamma squeeze, when Bitcoin goes up, it incentivizes it to go up even further based on these options and how they're structured. It's exceptionally interesting what is essentially very, very likely to take place on the back end of these options. This could be the very catalyst, and this could be why you've seen your institutions accumulating as aggressively as they have, which we've just shown you throughout this entire time period. We have a lot of technical targets. This is going to be explosive upside in our opinions. We've shown you prior structures that have done exactly this and led to that upside. The altcoin market will follow, ladies and gentlemen, and also follow in regards to the products that are formed around Bitcoin. But I've gone on for long enough now, guys. Get ready for just an amazing time for the cryptocurrency markets and space more broadly. On that note, I'm going to love and leave you. Thanks a lot for watching, everyone. I'll see you all in the next one.